good afternoon. Welcome to this week's edition of Finweek Money Matters. This is the show that helps you manage your finances. I'm Samantha Loring, and my co-host today, Finweek Deputy Editor Tandisizwe Mahlutshana and Jessica Hubbard, Finweek journalist. Well, let's take a look at what's coming up on the show today. We get into the best ways to incentivize against anti-competitive behavior. This on the back of the big news that rocked the construction sector last month. In our entrepreneurship slot, we sell the big idea to corporate clients and view the benefits and pitfalls of broadening your business reach. And we also nurse the wounds of the health industry here in South Africa and cover the fears of the aging nursing profession. Of course, we know that there's a dire shortage of nurses. We take a look at what's being done to solve this problem. If you have any comments for us, you know that email address, but there it is up on your screen, moneymatters@abn360.com. Well, of course, we know that players in the local construction industry were recently found guilty of collusion and subsequently fined by the Competition Commission. In the edition of Finweek this week, contributor Gavin Simonovitz explains why the fines imposed on the offending parties aren't enough of a deterrent to prevent similar wrongdoings in the future. He proposes a more effective three-pronged approach that to encourage healthy competition. At the desk with me, Gavin Simonovitz, the founder of fraudcracker.com, Cynthia Skimman, Managing Director of Ethics Monitor, and of course we've still got Jessica Hubbard and Tandisizwe Mahlutshana joining us at the desk. So Tandisizwe, I'll start off with you. We can get the perspective on the angle that Finweek chose to go with dealing with this story in South Africa, and certainly it's had everyone's emotions rocked. It's linked to World Cup projects amongst the other 140 projects I suppose it's been about. 1.46 billion rand is the fine that was imposed. But as I said, tell us about the angle you chose to go with.
Sam, I think South Africa is a nation that really unites when there's something to fight for, especially if it has something to do with money. And I suppose the construction cartel, corruption, collusion, whatever people call it comfortably, is one of those fights that we've all united to fight. And I suppose part of that fighting is coming up with ways of dealing with the culprits, as well as ensuring that such things don't happen again. And our contributor here, Dr. Gavin Simonovitz, also an expert in fighting corrupt business activities, put together this fantastic story that talks about what such behavior is doing to the society, and how simply throwing money at the problem makes these culprits not feel guilty for doing such things, and hence we have one collusive case or collusion case after the other. So I wanted to stimulate a debate, sort of a national debate, on how we can deal with these culprits, and not only that, but also how do we ensure that this type of behavior is shunned and not repeated, and how do we ensure that people who were wronged or robbed are properly compensated for their losses. And we know that so many people would have lost a lot of money during that whole World Cup infrastructure building or build-up.
Yeah, I mean, recently speaking to Chris Griffiths, who's the CEO of Anglo-American Platinum, and talking about, the impact of reducing supply on the price, and all of a sudden he jumped out and said, oh no, that would be anti-competitive. We know what's happened in the construction sector. It shows the sensitivity of, the top brass in South Africa to what's taken place. But Gavin, your argument is that this isn't enough, the way it's been constructed.
Yeah, Sam, the government was caught between a rock and a hard place, excuse the pun, with the construction industry. In that, obviously the government relies on the construction industry to a large extent to build the infrastructure that they need to create the jobs. And so it was very difficult to actually impose too harsh a penalty, because then they're actually going against their own objectives. But I think what they've done is almost on the opposite extreme, where they've treated the construction cartel with kid gloves and said, look, we're going to impose a fine because we know that anti-competitive behavior is wrong, but the size of that fine is, in most people's opinions, most critics' opinion, way too low. It's just a slap on the wrist. And that kind of sends a message to the rest of corporate South Africa to say, we don't really want you to collude, it's wrong, but if you do, then we're going to impose a fine, but it's not going to be too big, it's not going to be too harsh in terms of restricting your current ongoing operations. And as individuals, as directors, we're not going to prosecute you either. So the the kind of penalties that are being imposed are not seen to be in line with the size of the transgression.
So you're also arguing the size of the fine wasn't good enough. I mean, Cynthia, your thoughts on the role of the Competition Commission fines and basically, does a large enough fine, could that potentially then incentivize better behavior in South Africa?
Do you know, Samantha, the problem is that, as in fact Gavin's article captures so well, the fine in itself is not an effective deterrent. It has to be combined with something else. At the end of the day, you say, yeah, let's do a cost-benefit analysis, and you can work out whether the fine becomes affordable. But the issue here of the fine, yes, while one should protect the industry, we understand that it does present a somewhat of a dilemma. But the fact that there's no individual accountability, that there is not in fact a meaningful, if you want, sanction, really has generated, as we've seen in the press, enormous outrage, and I think it's a direct reflection of the fact that this matter has not in fact got appropriate sanction.
Gavin had a great example of comparing the business sort of cost that was almost incorporated into the way you do business, similarly to how a guy rides an expensive car and incorporates the fines of driving too fast into, that's just what it costs to drive an expensive car in this country.
And I suppose if you're driving an expensive car, you would assume that you have enough money to pay expensive fines. And also, I think what is interesting, potentially not always the case, but what is interesting is the Freakonomics story that you chose to use at the beginning. So just to maybe just tell us why you chose to use that and just give us a little background.
Right, well, that's really, it was investigating the extent to which social norms can be converted into monetary norms. So the researchers said, well, imagine that you're a parent who's going to pick up the kids from creche in the afternoon. You feel bad about coming late to pick up your kids. Let's say it closes at 4 o'clock. If you arrive at 4:10, then you know that the staff at the creche are waiting for you. You know you feel bad about having to make them wait for you, and so you try to be on time. What they tried as an experiment is to say, instead of making it a social normal contract, let's actually impose a monetary fee. So say, if you come late to pick up your kids, it's going to be a 25 Rand penalty that you're going to pay. And the thinking is, if you impose a penalty, then it's going to drive behavior away from having to incur that penalty. In other words, there'll be less late pickups going forward. In fact, what the researchers found was exactly the opposite. They found that the late pickups increased. And what they said is it changed the environment that the parents were in. Instead of being a social norm or a contract that people felt bad about this behavior because it was impacting on other people, it now got converted into a monetary contract. They knew the price of the transgression. It was now, say, a 25 Rand penalty fee that they had to pay. And I think what's happening with collusion in the broader South African corporate industry is that you are effectively saying to companies, we don't want you to collude or be anti-competitive because it's wrong. But if you do, then this is what the price is going to be. And it's going to be
10% of turnover.
Well, not even 10%. They charge 3%, in fact, of the value of the contracts, which was way less than even 3% of the annual turnover. So it was a very reduced fee. It was almost like a 25 Rand penalty fee for being late to pick up your kids. And I think what's happened is they've converted the social normal contract of not being dishonest into a monetary one where companies know the price of collusion, and they can work it out whether the profits are enough to offset the cost of that. And if it is, then it's just good business practice to maximize profits for your shareholders. Excuse the pain.
Sorry, a quick question for Cynthia. When they calculate the cost, do you think they're taking into account the reputational cost? Because it's not a palpable cost, but there is one.
One would like to think so, Jessica, but the reality is we've seen in the press already that the companies that are on that list, and the few who have not yet admitted and they're still dealing with the Competition Commission, they're being awarded contracts. So yes, there are organizations and many sectors of the public that are outraged, and we would talk about reputation damage, but they're still getting the work. So of course there is a reputational damage aspect, but I don't think that has been as meaningful and has as much of an impact as we would wish it had.
I mean, I'm going to try and get into the mind of the colluder. Is it fair to say that when sitting in that boardroom together and trying to collude, is it fair that in their minds they calculate, for us to make 10 rands, it'll cost us 2 rands. So let's go and do it, because we'll make the 10 rands and they will charge us 2 rands. So we'll still be left with a profit of 8 rands. Would that be how, they plan these things? Would that, the sort of, mindsets they would have?
I don't think they physically calculate it. I don't think they sit down and they work out with an Excel spreadsheet, the amount of profits they're getting and compare that against the potential fines, because there's a lot of unknowns. But I think what this sends the message is that when you are fined, I mean, effectively, if you look at the size of the fine relative to the size of the contracts, it's about 3% of the value of the contracts. Margins in the construction industry are about 3 to 5% over the last couple of years. So effectively, all they're losing is the profits that they made on the tenders that they were awarded. So you don't need a spreadsheet to work that out. You know that if you go in and collude with your competitors, and you are found out, then all you're going to do is lose the profits that you've generated on the business that you wrote.
Yeah.
So, yeah.
Let's get into the approach that you're looking at right now. The first prong of it is finding dividends, and ultimately basically using dividends to extract the fine. And I think that's an interesting one, because you're punishing shareholders there, who some of them would say we were very innocent in this. Why is that?
All right. Well, firstly, what they're doing at the moment is punishing shareholders, because what you're saying is you're paying a big fine now that's coming straight out of the company profits, which is directly affecting your current shareholders. What I'm saying is, and it hampers the current business operations, which is what the government is trying to avoid. What I'm saying is, instead of doing that to current shareholders, let's punish the future shareholders. So let's say all the future dividends that would have been paid by the company, and you force them to pay it in line with historic dividend yields, those will be used to whittle down a fine that has been imposed on as a penalty. And so for the next 3 years or 5 years or whatever it is, shareholders won't actually be receiving those dividends in their pockets. It'll be used to whittle down the fines, which will affect future shareholders, which will make that share much more unattractive at the moment, and will probably cause a lot of people to dump their shares in the company.
And
now.
that's ultimately how management would then suffer. What are your thoughts on that, Cynthia?
Well, I mean, certainly it would erode any possibility of sort of performance bonuses, and that, of course, is one of the issues one's also talking about, around saying the performance bonuses that were paid should in fact be refunded, so to speak, and certainly one shouldn't have benefited out of that. But people do, and we've seen in other industries that bonuses get paid in the most absurd circumstances. So I wouldn't be one to put up my hand and say I foresee no bonuses if this happened. Somehow there have been industries managed to sneak it in, no matter what it would appear.
Yeah, I mean, in terms of criminally trying some of these culprits, ultimately, who led the collusion, that's still a possibility. It's just who's going to take them to court, Gavin.
I think so. I mean, there's a lot of calls for people to be criminally prosecuted. I've heard one legal argument that actually they haven't transgressed any physical laws, and so it's going to be very difficult to criminally prosecute them and put them in jail, which is a pity, because I think that would probably send the strongest message to say, well, if you as an individual act on behalf of your company anti-competitively, then you as an individual will be punished and go to jail. And I don't think it's going to happen, but ideally it should.
Yeah. How much time do you think businesses spend on looking at anti-competitive laws? What constitutes being, anti-competitive? What constitutes colluding? How much cognizance do you think that top management in South Africa pays to that?
Do you know, Samantha, to take that beyond your question, companies are committing extraordinary amounts of time to the broad area of compliance with laws and rules and regulations, and actually there are a plethora of them that, I mean, you would easily find a compliance officer in an organization ahead of an ethics officer. And while that compliance is clearly an important aspect, coming from my perspective, I'm saying that that's not adequate. It's essential, but not adequate. And it's around saying what is happening to in fact shift the behavior beyond mere sort of tick box compliance. And that's certainly what I'm not seeing.
And whistleblowing, Gavin, you make a great suggestion about whistleblowing. I happened to have a conversation last night with a colleague, and we're talking about this very story of yours, and I mentioned your suggestion, but he came up with a very interesting thinking, and he says if you incentivize the whistleblower as much as you do. If we collude, in this group here, and we think, oh my goodness, now we will be found out. So how about sending Jess to go and, whistleblow? And from what Jess will get, we all collude again and we share in those profits.
Right, okay, so just to put some context behind that.
Yeah, so I suppose you have to explain what your solution was there.
All right, so the suggestion around whistleblowing was two-pronged as well. Firstly, you need to enable people to have a safe mechanism in order to report any kind of anti-competitive behavior without revealing their identity. That's really important.
And do we not have any mechanism like that
at the moment? Not really. At the moment, it's really telephone hotline type things where people phone in and they can act as if they're anonymous, but ultimately they know their voices are recorded, and so that's not really done. The system that we've developed, for example, is online and does protect that identity, but in general, it's not that well protected. And the second part of that is like you were saying, is we actually incentivize people with a monetary reward to report wrongdoing. So and there's precedent for this in the US with the Dodd-Frank law, where if people report violations that lead to a recovery, then they are paid a certain percentage of that recovery by the government. And I was suggesting that could work in South Africa. Your point about people colluding with each other and then reporting on each other would work if there were no criminal sanctions. So what could happen is I'm going to report on you, now you're going to be found out, and ultimately could be criminally prosecuted. Now you could argue, well, is it worth colluding with each other to earn a couple of 100,000 rand or whatever if we're all going to go to jail?
Mm-hmm. Yeah. So there we go. The last prong of this is ring fencing the fines ultimately, because what we do know is the fines go into government coffers. We don't know where that money goes. We don't know how much of it is efficiently used. Do you think that we could ultimately have a ring fencing and an efficient use and channeling of the fines in South Africa?
Well, that's a much bigger question.
You're just posing that as a possible solution.
Yes, I mean that's a bigger question in terms of how our taxes are collected in general. There's a big call for our taxes, for example, with SANRAL, with the e-tolls, that it goes towards maintaining the roads, for example, or that certain amounts of our tax revenue goes towards education, etc., rather than just going into the National Revenue Fund, which is just a big pot which our government decides where it needs to go. So, ideally we'd like to see some of that type of accountability where the penalties, because of wrongdoing, is used to address the victims who suffered as a result of that wrongdoing. I think that's the ultimate what everyone wants.
There was a nice example, I think, in the case of the bread price fixing scandal. You were suggesting that the penalties go to subsidising the cost of bread. So it's really getting back to the man in the street.
Yeah,
exactly.
The last point, Cynthia. You work with this all the time. You look at right behaviour, wrong behaviour. What, in your experience, incentivizes people to do the right thing when they're running businesses?
I'd like to think there are a group who do the right behavior, do the right thing because they are personally committed to ethical behavior. But in general, we do need some further encouragement. And while sanctions, while penalties are part of it, we are generally not focusing nearly enough attention on promoting ethical behavior. We're simply focusing on reducing unethical behavior. So for me, there's a huge role for industry bodies to be promoting ethical conduct and, as King 3 recommends, measure the ethical behavior in your industry, monitor it, report on it.
Yeah, and have to leave it at that for today. Thank you so much for joining us, Cynthia Skimman, Managing Director of the Ethics Monitor, and Gavin Szymanowicz, who stays with us for the next segment after the break. Remember that you can read more about these stories and many others in this week's edition of Finweek. That's on shelves from today. Magazine is also available digitally in English and Afrikaans at via mysubs.co.za. But it's time now to take a look at our Finweek Trade of the Week. Well, this week we're taking a look at Liberty Holdings. We know they reported a 6-month result, first half results yesterday, that up to the end of June. We see the stock up on the day today. So what do you take away from that? And are you going long or short of the stock?
First of all, I think it's a buy. I think it's a good quality company. There was a bit of disappointment when they released results because the day before they closed at about 122.60 cents. Then on the day they went down to about 19 cents. I'm not really sure what happened there, but in my view, I think the results were sound. Group earnings up 32%, customer net cash flows to about 11 billion and an interim dividend of about 212 cents, which I think the market actually welcomed. The asset management business also seems to be doing well here as well as in Africa. There were some drawdowns in their mandates in the East African government, but still they managed to show good numbers. And looking back, I think it's a stock within the insurance industry that did quite well over the last few months with all the volatility. In fact, I think it led the gains with the peers. It's had brilliant product development over the last few months. For a lot of years, it was on autopilot, but I think the management now is quite switched on, and there's a lot of focus on the customer. It's quite careful on Africa. It's quite careful, especially on West Africa and Nigeria. But it says there are exciting opportunities there, but it is waiting for the right partners and for the opportunity with the right price to actually grow and extend their expansion. So all in all,
you don't think the conservative approach would make them the Adcock Ingram in kind of the insurance sector in a few years' time? Of course, we know what Aspen has done when it comes to aggressive expansion.
I mean, I think the question then really is, and I think you make a good point, I think the question really is, do they go quick and make rash decisions, or do they hold and go in when they are absolutely sure that this is what they want to do? They do have an existing health business in Nigeria, which is also doing well, but they're also quite wary in terms of extending it and growing it. I think at the moment it's employing roughly between 350 and 400 people, which is quite good.
Yeah.
But I mean, there's all the laws, there's the reforms going on, so they're waiting for all of that dust to settle.
Great. Well, there we go. Go long Liberty Holdings, according to Tandisizwe. That, of course, is this week's trade of the week. It's time now to pay the bills here. We'll be right back after the short break. Welcome back. Bringing a great idea into fruition that requires time and resources. But what happens if you develop an idea only to find out that it has a fatal flaw if you don't have enough resources to develop your idea at all? So this week we discussed the benefits and the potential pitfalls of selling your idea to a corporate client early on in the process. Gavin Simonovitz, founder of blockbusterinnovation.com, is still with us. Joining him at the desk, Mark Castell, founder and CEO of Rogue Rally. Jessica and Tandisizwe still with us at the desk here. So Mark, I'm going to throw straight to you because you came up with a great idea, and you're here to give us the example that, and teach us some of the lessons that you have learned from going to big corporates and getting sponsors and the process that you've gone through. But first off, tell us about Rogue Rally, the first one being held this year.
Rogue Rally is pretty much a supercar rally around the country. We had 53 supercars over 6 days and 7 nights, blasting around the country. We had closed road sections, race circuits, gymkhanas, drags. It's a really octane, fun-filled week.
What made it different?
Compared to...
Or anything else? I mean, why was your idea so unique?
Because it's the first time South Africa's ever had a real supercar rally. So we only allowed Porsches, Ferraris, Lamborghinis, McLarens, Aston Martins. So it really was a high-level rally around the country. It's the first time it's been done in Africa. It's been done quite a bit in the States and the UK. So it's pretty much taking one of their ideas, making it better, and bringing it to South Africa. So a lot of things on the rally we did 10 times better than international rallies, where we had like Pirelli support trucks with tires, we had medical response, we had a medical evacuation helicopter. So we really went all out, and I think did it better than the guys over the pond.
So there we go. You saw a great idea.
Yeah.
You thought this could be applicable, and we could, have something like this in South Africa. Now you've got to go and find the money to make it
Yeah.
happen. What was the process you used there?
It was very difficult. We tried the traditional routes, knocking on corporate doors, the large corporate stores and that type of thing. Had no success with that. And I realized pretty quickly it's all about your network and who you know and who your friends' friends know. And it really boiled down to, after all the corporates, after all the knocking on doors, we actually got the money from a local company who I actually know very well. So that's how it came down to it. So from a sponsor point of view, the cash came from somebody I actually knew. The partners came on board who sponsored services and product like the Daytona Group, Legacy Lifestyle, Helivac, Pirelli Tires. They got on board pretty early on because I just loved the idea and hopefully they liked me.
Just a quick one. With the big corporates, why were they turning you down, do you think? Did they give you reasons for rejecting?
It's very difficult in year one. You're selling an idea. You're not really selling a product. And I was very aware of the fact that going into it, I was actually selling an idea and a concept. And I had to sell myself. They had to buy into me to buy into my idea. So it's very difficult to say, this is going to happen, this is going to happen, this is the crowd, this is the PR, this is the free TV, radio, print, online. We're going to get out of this, and the exposure for you will be X. That was very difficult. So I was pretty much selling an idea. And I think when it comes to big corporates, they're not big on ideas. They want you to do the first year. A lot of the guys, the bigger guys, said to me, well, put off the first year, can't speak to you about the second year. So
They don't want to take the risks.
they don't want to take the risk.
Yeah.
And I totally understand it. It is a big idea. It's something different. Luckily, it was something very exciting. So we did get a lot of support from people. And I must say, what really helps is the support you get from certain partners, backers, friends, companies. Initially, it keeps you driving and keeps you going on.
I just want to pick up on the idea of the idea. It's always interesting in terms of